Welcome to Face the Analyst. I'm your host, Jay Taylor, and I'm really pleased to have with me today Robert Eady. He is the Executive Chairman and CEO of a company called Starcore International. This is a company that really is, I think, off the radar screen of most investors, and I think that's most unfortunate. Of course, we're here to try to help you see value, and this is one company, based on what I see so far, suggests that this is a very, very undervalued stock. It's a company that is traded on the Toronto Exchange under the symbol SAM. There's about 117 million shares outstanding, trading at 25 cents and giving it a market cap of about $35 million. Welcome, Robert, to Face the Analyst.
Thank you, Jay. It's a pleasure to be with you.
Really good to have you. And you know, as I was preparing a little bit for this discussion, I recall it's a company that I did cover in my newsletter some time ago, but I was pleasantly surprised to read your most a recent press release in which you had generated something like $3.2 million in profits for the last quarter. Talk to us a little bit about your project. What is the name of the project in Mexico?
It's called San Martin, and it's been an operating mine that's been in business for 17 years. It's quite a turnaround story for us, with a 33% increase in production over last year. Our last quarter was our best quarter ever. We're very pleased to be able to deliver record earnings for shareholders and on behalf of shareholders.
How much gold are you producing there on a monthly basis?
Approximately 2,000 ounces. That's our target. 1,600 ounces of gold, another 400 ounces of gold equivalent, which is silver.
Silver. And what do you figure your cost is, maybe your cash cost, if you could talk about that?
Around $621. $621, and we've been investing quite heavily in exploration in the mine.
$621 cash cost. Now you do have, though, an obligation to forward sales commitment. You're selling a portion. How much of the gold are you selling, and at what price are you selling on the forward market?
We sell roughly about half of our gold production on the forward market at $731. Mm-hmm. We're extremely excited because we've entered into our last year.
And so that'll be rolling off the books pretty soon. So then you can do those 2,000 ounces a month at the market price for gold, which is considerably higher than $731 now.
Correct, and it'll be a year almost to the date, and at that point in time we'll celebrate largely with shareholders, because we intend to be a dividend-paying gold producer at that point.
A dividend-paying gold producer, and can you talk to us a little bit about what kind of dividends investors might expect if you're going to be producing, or how much of your profits, for example, might you pay out in dividends?
We're going to, as a board and as an operating management team, look to push about 50% back to shareholders, 50% of mine income, and use the rest internally for exploration.
Mm-hmm. So what is your gold resource there now?
2 years production, so 50,000 ounces. But it's been 2 years for 17 years. The mine's always operated in that way. We do anticipate next year to be able to post 3 years in front of us. There is a lot of probable resources there that we'll be able to convert.
So this is an underground mine, and it's not uncommon. A lot of mines have run for many, many years, never having more than a couple of years ahead of production. If you can get 3 years. What is the exploration potential here? I mean, can this mine be bigger than a 2,000 a month producer?
Well, that would be what we're most excited about, is that the property's 12,995 hectares, and we occupy about 8% of that property. And really, no modern day exploration has been put into the property, or a sizable budget, where we expect a budget of $5 million to go into exploration in the first year. And we think that will enlarge the property and the potential of expanding the mine greatly.
So would you be able then to increase production? You'll have to increase your mill capacity. How will this pan out, assuming you find additional reserves?
Even without finding additional reserves, it is in our budgets next year to expand the mill. Currently we're 800 tons per day. We want to expand it to 1,000 tons per day, and that would allow us to increase production. And if we do expand the size of the mine considerably, we'd have to look at other options.
So you've got this large property to explore. You've got cash flow. What I like about really at this stage of this bull market in gold, and given my view that the equity markets aren't that strong, there's a lot of risk out there with the debt overhang in the global economy. I mean, I tend to be a little bit bearish on equities in general, but what I like are gold mining companies that are producing record profits that have, and this is a growing phenomenon actually. We're seeing the major gold mining companies and smaller ones like you too, picking up, you just announced a record profit, quarterly profit. The profitability for gold mining producers has really gotten very, very strong with the real price of gold having risen dramatically since the Lehman Brothers decline. And we're seeing this in many companies. What I really like about your story is that you have cash flow now that you can use to explore and develop, pay out dividends, which I think is really exciting because I think that's what the market wants to see. People need dividends these days more than ever, and they're not looking necessarily for as much for appreciation, although from 25 cents I would hope that we'll see some appreciation. I think that could come with dividends. But what I find really exciting is the ability to grow organically, cash flow positive, put it in the ground. That's the plan here, I guess.
That is the plan. The plan is to dividend out roughly half and then take the other half and grow organically within the company. And that puts us into, I think, an excellent position from a business point of view perspective, allowing ourselves cash to be able to explore, possibly acquire other properties. It really opens the doors for us.
Well, I definitely agree with you there because I believe that if my view of the markets and the equity markets, if there's going to be a period of weakness, there's going to be a lot of vulnerability from companies that don't have cash flow. That is, the companies that are producing like you are, and if you're able to continue producing and grow your profits, then you're going to be in the driver's seat and probably pick up some projects and certainly grow organically, which I think is very, very exciting. Now, you're in Mexico. There are some issues in Mexico about drug-related problems. Is that an issue for your company at all?
Not so far. It isn't. We do take precautions. We do have security measures in place. We are 3 hours from Mexico City. We're next to a city called Querétaro, which was voted the safest city in Mexico last year. And the mine's essentially a kilometer off the highway.
So you have this real potential to grow. There is some speculation, and this would be speculation, I guess, only that you could come up with an elephant. I mean, is there some geological theory that might allow you to maybe come up with something big? Is that a possibility?
That is a possibility. We've had a dozen geologists to the property over the years, and there is a model that's been formed out of books that have been written about Mexican ore deposits. We do own a complete district. We don't just own a mine, we own an epithermal district is the theory. And so the mine is epithermal, but the theory is that the entire district is the deposit. And if that be the case, then it would be definitely an elephant. And the potential certainly lies there because it's open to the south, it's open to the north, the east, and the west.
So you're going to spend, I think if I heard you correctly, $5 million on your exploration project?
That's our
budget?
That's our budget.
For 2012?
2013.
2013.
Yeah.
And you have an ongoing program now, though, in 2012?
We have, we drill almost 13,000 meters a year with exploration just within the mine. And to put that into terms of juniors, most juniors are lucky if they drill 2,000 or 3,000 meters a year, whereas we're bringing in 13,000 meters every year in exploration and development.
And what's good about it is that you've got cash flow to finance that. You don't have to go back to the market, keep diluting shareholder interest, which is very important.
Correct.
Let me ask you in terms of the management. Does the management have some skin in the game here? Does management own?
Absolutely. Management owns a portion of the company and since day one and has invested quite a lot of money into the company.
So this is important, I think, because the interest of management then is aligned with the interest of shareholders, at least to a great extent. So,
absolutely.
So it's now you acquired this project how?
We bought it from Goldcorp 5 years ago when they merged with Glamis and Wheaton River, and it was viewed as too small for Goldcorp. We bought it half debt, half equity. We're now repaying our debt. We're down to the final 12 months. We're in an excellent position now to grow the company organically with strong exploration upside, and we own the property 100% and there are no NSRs.
Oh, that's very good, and you're going to be getting rid of that gold loan pretty soon, that forward sale, which really will allow you then to enjoy the full benefit of this gold bull market. Is there anything else you'd like to tell our viewers before we conclude our discussion?
No, I think that about covers it, and for more information people can go to our website, which is www.starcore.com.
Excellent. Very good, very good. Well, it's really good, Robert, to hear this story again. It's one that I did follow, as I noted earlier in my newsletter. I think it's something I'm going to have to take another look at for my subscribers, especially given the possibilities of dividends, which I think will be very exciting to them. I want to thank you very much. Pleasure meeting up with you.
Thank you very much.
All the best
Jay.
to you guys. We'll be putting you back on our radar screen, no doubt about that.
Good.
Thank you very much.